team members, it's Navarro, head trader, Penny Stocks Club 13. In this video, we're gonna go over what's coming up in the week ahead, week of June 21st, 2022. We're gonna be looking at the SPY and some penny stocks or small caps that I think have some value in them, and we're gonna go ahead and break them down, evaluate them, so it can be ready for trading them tomorrow. So here we have the SPY, the 1 year, 1 day, and as you all know, we're in bear market territory right now. We do continue having a downtrend, but downtrends do have some upside. As you all can see, if we start from this year's high, the all-time highs, every time we make a move down, we always have that pullback to the upside and then continuation to the downside, and that's normal profit taking, good news, and buyers, investors alike. So that's the way the market works. It doesn't go down in a straight line, doesn't go up in a straight line. There are up and down movements in bear markets as well. So what are we expecting right now? We do have in current trading sessions in the past 2 weeks several gap downs. So I'm gonna go ahead and zoom in here. We do have a gap down after the bull flag failed. We had a bull flag here, this consolidation pattern. Then we broke down and gapped down big time. Then we have another small little gap right here. So what I'm thinking is that it has been going down for almost 7 or 8 consecutive days, and I'm thinking it's gonna pull back, continue moving a little higher before it continues moving lower. I'm not calling a bottom. There's no way we're gonna be able to do that, but we do know that the SPY tends to fill gaps, or at least it tries to fill them all the time. So we have a gap up to this level right here, the 372.25 area. Then we have another one up here to the 373. So we have a little gap fill that we might expect to happen sometime next week, if that's what the SPY tends to do, right? Then after that, now we gotta look for the bear side, right? We gotta be able to understand that it might not fill the gap and it might just continue moving lower. So we gotta find levels of support and demand zones that are important. So let's zoom out, and we notice that there is no information for us to find those levels. So we're gonna have to go to the 3 year, to the weekly chart. So here, every single candle is 1 week. It's 5 days, right? Trading days. So what we're gonna do here, we're gonna go ahead and look for those important support and resistance levels. So we have one here at around the 360 level, and then we have this little zone down to the 351. So if you can notice right now on the weekly chart, we have the 180 SMA, which is particularly where this important confluence level, this area of resistance, can become a demand zone, at least a temporary demand zone, right? So there's still room to the downside. And then if we start looking for the support, again, remember this is resistance here. The support is down here at the bottom, which I already had a line there around the 322, 320 level. That's another key support level. So there's still room to the downside, okay? And in my opinion, I think we gotta go up before we continue moving down. But there might be some key or temporary relief, at least a consolidation somewhere here, if it continues moving towards these levels down at the 180 SMA on the weekly chart. So that's what we're looking for to the bear side. And of course, going back to the bull side is that gap fill and possibly test that 9. So it might have room to 375, possibly 380. In my opinion, I think the market's a little heavy right now, so making that kind of a move is a little tougher, but it can be done. During times of bear markets, those strong moves up are usually very good in a sense, because you got all the bears, all the shorts maybe taking profits and then investors coming in and buying, so that adds a lot of buying pressure, and that's those little quick moves up that we see on this bear market trends. So basically this is what we're talking about. You got the shorts coming in heavy, and then you get this huge profit taking and investors coming in, and you get this huge volatility, this huge candles. So maybe something like that, and coming in to test those EMA lines, the 9, the 20. It's something possible before we continue moving lower. So I just wanted to emphasize that. Now let's go ahead and move on to the small caps, and there's a few that I see some value in. I'm gonna start with the ORTX oversold pattern. It's starting to find the base down here around the 40 cent, 50 cent level. As you can see, it tried to break above the 50 EMA, came back down, broke below the 9 and the 20, but now had a good volume bar, a decent price action. So now what we can look for is hopefully a high open, a higher open somewhere around the 61 cent area, somewhere here. What we would love to see here is this 50 EMA around the 56 cent area. Let me go ahead and draw that little zone. So we would like this level here, this 57 cent level, become strong support, right? So if we open high, come and test it, then if it holds, we can start buying into building a position from 57 to 60, start buying into it for a swing trade and a possible move. A possible move higher, guys, to 65 cents, 70 cents possible. And ORTX has proven in the past that it can make some big moves. So we can go ahead and look for those levels. You can see here it's basing out, so we can go ahead and draw our line right there, and you can see that it coincides exactly with the 70 cent level. So if I zoom in here a little better, you might be able to see that. So there's that 70 cent level based off of those previous support levels that we talked about right here. So we got those support levels, and that's around the 70 cent level. So we can expect a move all the way up here on a swing trade, maybe possibly 2 to 3 days, maybe 1 day. Again, this one does tend to make large moves when it starts moving, especially on good volume. So ORTX, guys, an entry around the 57, 58 cent level, a push through 60, possibly 65, start taking profits because there's another bit of support level here. So that might become resistance. And then if we want to let some runners run, maybe a push all the way up to 70 cents. Again, I see value in this. If you don't, then don't trade it. But again, we trade what we see and what the charts tell us, and then we come up with a plan and we try to execute the plan the best that we can. HLBZ, another oversold pattern, and this one also huge mover. If you look at the history, previous history, if you look at to the left, it's made huge moves. Now we have to be careful with this one, because even though it's made huge moves, we notice that every time it makes a huge move, for example here, it made a huge move, but then it got knocked back down again. The same thing here, made a huge move, got knocked back down, and you can see the trend. So this is not something that we would want to hold for a long time, maybe a one-day swing, especially right now that it's oversold, because it might be a different type of trade. But if it's a day trade possibility, it would be even best, because considering the way this trades, we don't want to be caught in a position where we're going to be holding this stock and then ending up the following day with a huge loss. So let's go ahead and zoom in here. Now there was a bit of volume here, and the volume starting to increase. As you can see to the left, there was hardly any volume. So now it's starting to show interest at these levels, where maybe there's this shorts are starting to cover. Investors and traders alike are trying to, or see this right now, so they're trying to jump in as well, setting some positions, or starting to create their position and get themselves into some good entries, so that they can start taking profits as soon as it starts making a move. So right now it is basing out right above the 50 cent level, around 67 cents, and this 85 cent level, which is, you know, huge range considering. So my idea here is let me move this up here, is for it to break this key resistance level of 90 cents. If it breaks through, then we can see some continuation to the upside, and we do have some resistance levels here around the 125 area. So that's the move that I'm looking for, nothing more or less, because again, we don't want to be trading something that we know tends to get knocked down. But that's a good 40% range. We don't need to get the entire 40%. You need to understand that. If you can get 20, 25, even 10%, you know, that's good enough. You take your wins, you start building your consistency, and then you move on. So the HLBZ, that's where I would like to enter and exit. 90 cents to the $1.20, $1.25 level. Then I have one more, CRIS. This one, again, another oversold pattern. And then volume starting to come in, trading above the 9 and the 20 EMA, which is something that I like, because now we can have a move to the 50 EMA. So if you notice, we got a little bit of a flat top right around this level, which is like the 110 level, 108, 109. We're gonna go here and try to make that resistance line there. Okay, so that would be something that we would want to enter. We have space to build a position somewhere here, right above this previous candle's high, and then this previous resistance. This would be where you would want to build your position, and if it fails, then you would want to sell if it breaks below the 9 on the 20 EMA, right? So we've got that kind of a stop loss there, and we would like a move to the 120, 130 level. Let's go ahead and look back at previous resistance, and there's basically room to this area of previous support right here, where you can see 1, 2, 3, 4 touches around the 130 level. Okay, and then after that, of course, we got the 150, but our first profit target, mainly our main profit target would be 130 in my opinion. So we can also have the 50 act as resistance, so we gotta be ready for it. So we got first profit target, second profit target, and third profit target. Again, I take most of my position off around here and then leave some for the 130 level, but that is something that we can start building on. And then if we take this trade, for example, we enter at 110, exit at 120, 125, 130, then we let it do what it wants to do for the next few days. If it establishes support on the above the 50 EMA, then we can take another entry to the 150 level, and that'll be 2 trades that we can take instead of just one and trying to hope for the best. We take profits on the first trade, we let it set up again, and then enter again and trade the move higher to the 150 level. That is all I have for you today, guys. Hope you all have a great week, this coming week, and hope everybody had a great Father's Day weekend. Catch you all in the next one.